let's talk about the more freshly baked stuff. When Cathie Woods decided to offload her shares in Palantir, actually a day before the earnings came out. Why did she do this? So we'll find out a little bit more. And right now, she should be a very so-called set investor because after she sell, the earnings came out. Of course, it turns out to be a good earnings session for Palantir, and the share price actually shot up to like $47, right? Some of you guys actually mentioned earlier in the comment section. When she sell this Palantir stock itself, is it a problem? One thing that I went to find out is that they sell off is not so much as to say that Palantir is not a company that is not worth investing, or it's like there's something wrong with the investment thesis. They actually sold it to reduce their stake. And then if you were to look into their buy price, which is one of the more important factors when we talk about investments, is your entry price. And over the years, she has buy and sell. Of course, she sold at a very interesting time. She sold it when the shares was going down. So to be honest, like this might not be the best time to sell, but as investors, we can't really time the market. As she was selling and buying, net, her purchase price was actually 14.6. When she sold it, is it a bad thing, right? It's actually not. Because if we were to look at the context of her buy price and the sold price, actually she's still gaining around almost 200% increase. Is it a good thing? Is it a good thing? I think it is lah. She still holds a large portion of shares. It's just that she's just releasing some of this position so that maybe like Warren Buffett, she just want to hold cash in case something comes up. That's my understanding of the reason why she does. But right now, I think with that cash on hand, of course, similar to me, I actually did a sell call previously and it got exercised. So I was like, bittersweet feelings right now. But of course, the reason why I sold it was to rebalance my portfolio to increase my cash pile. So in that sense, I wouldn't feel so sad because there was a reason for doing it, and that is part of my portfolio rebalancing act. Okay, so why did it go up? Let's go deeper into it. And then, so one of it was because like the expectations, they totally crushed it. So last quarter, this was what they expected the results to be, the revenue to be between 697 million to 701 million. And if we were to look at this quarter's results, they clearly beat it. They estimate for 700 million, but they gave out a result of like 725 million, right? So that's like another $24 million extra, right? So of course, as analysts, you're like, wow, you did better than expected, right? But these are more short-term expectations, right? So same thing, the adjusted income from operations also increased or beat the amount that was being estimated on. Right, so they really nailed it, right? Due to the uncertain or the volatile times around other areas in the world, their company actually helped the defense sector to have the latest or the cutting edge technology to fend off and also make better warfare decisions, right? Which is of course the best thing when you are in the military, right? You of course want the best thing that helps you, right? This year, right, what they want to actually achieve is this is the expectations. So if I went to calculate it, what this means is actually for the next quarter and compared to last year's Q4 2023 earnings, right? They're looking at a 26 to 27% growth. So for company to grow so fast, and later on we'll see some more results and some more numbers to make you happier. But of course, calm down. So we also talk a little bit about the valuation side of things. And finally, with this whole shootout, is it a good time to enter? We'll discuss it shortly. Okay, but some of the good highlights is that they are growing their revenue. The growth rates, in fact, is increasing, right? Growth rates increasing, right? When we talk about tech companies, right? Usually the growth is actually like slowing down over time because when they started out, they have a lot of marketing dollars to expand and get more customers, right? That's when you can see that the growth is actually like a few hundreds to a few thousand%. And across the different and the years, right, the growth rate actually tapers down because as your size get bigger, the growth is actually harder to match the same amount as compared to last year's year-over-year growth, right? Their growth rate is increasing, and this quarter they reached a 30% growth rate, right? Of course, all things are good for them because they are like get net income positive for a few quarters already. And with that inclusion into S&P 500, which kind of give them the recognition that they are doing well. And of course, with that spotlight on them, right, this is probably why they got more customers along the way, right? And this quarter itself, the earnings actually focus a lot on highlighting about like last quarters as well, right? They've been talking about they are focusing a lot and their revenues, their performance has been so well because of the help of the US companies, right? And if I were to consolidate all of this graph that is on its own is a bit one-dimensional, you can see that there's a growth. But if you were to look into this comparison between the US and non-US side of things, you can see that if you were to compare last year's Q3 and this year's Q3, can you see that the US contribution to their revenue actually increased from 62 to 69? If you can see that, type in a yes in the chat. Right. So not just that, in terms of the growth is, yeah, for both the commercial and government side is also increasing individually. Right. So you can see that this can be a good thing and a bad thing to a company, right? Because why do I say so? Right? Because when a company's revenue streams previously divided 50-50 into US versus non-US, right? It gives you that assurance or give you that sense of safety because their revenue streams are coming from diversified ways, right? But now that their revenue streams are coming more and more from the US side, which increases the concentration risk. This is something that as investors we still need to take note of, even though right, they have been reporting good numbers. We never know when or touch wood if it were to happen, right? Some faults were to happen with Palantir, which results in them losing their contracts. People started to not using them like other companies. Then that's when being so heavily having their revenues generated from US is going to impact them greatly. Okay, so this is just something to take note of the concentration risk in terms of coming from US. You can see that in the whole earnings slides, they talk a lot about US commercial being the driver to a lot of things. And they have a reason because with AIPs, which is like their iteration of using large language models or chat GPT-like functions, but in the context of the companies able to extract information from different places, connecting them, and through text, just like how you would ask ChatGPT for certain instructions, right? It gives the companies more insights on how to either save money or generate more money, right? So I think these are the two most important things when it comes down to a business, right? Either you help the company save money or you help the company earn more money, and then people will start to use your services, right? And across the quarters, they have gained so many customers from the AIP, which is amazing. This quarter itself, they actually acquired 39 new customers, out of which 33 of them, right, is actually US customers. This also tells you that US customers are like more willing or they know how useful Palantir's products is because they have been working with government bodies, they've been working with big companies. In fact, they also are partnering with Meta in terms of using their Llama LLMs inside of this AIP as well. So you can see that the very biggest push for them, right, is the US side of things. You know, their revenues are growing at high or mid double digit kind of growth, and the customer counts for US side is grow 5 times. Can you imagine like you start off the year with 100 customers and then 5 or 3 years later it becomes 500? That's like insane, right? Yeah, this is to also show you that, well, I think this is where being added into S&P 500 kind of give them that boost. Or maybe, like what Clement says, US customers are more generous. I wouldn't say they're more generous. I would say that they are more inclined into using products to help them boost either savings or earnings. Yeah, so if you can do that for me, I also love to use it. Yeah, so talking about that, recently one of the coverage companies was actually in healthcare. So was like thinking if only right Singapore can start to use Palantir's product to help the waiting time of our whole healthcare system to improve. I think that would be so amazing, especially in the subsidized areas. Okay, so I don't know whether this video will be relayed to some of you guys who are in the healthcare sectors, but if you are, do promote this a bit, not because of I'm a shareholder, but more of improving the overall experience of the citizens. Yeah. Yeah. So why there was a spike for their quarter, right? I believe lah, because there was a big chunk of people that is new customers, right? Is like 1 million. And why do I have so much anticipations and how I feel about this is that as software companies, what they want to do is, of course, to firstly need to land the customers, meaning to say you need to secure the customers, make sure that the customer starts using your products. That's step number one. And when the companies use your products, of course, you would like them to share with more of their teams inside, because when they start using a new product, nobody will straight away roll out to the whole company. They will usually start with a small team. And then if it's good, let's maybe use it for 3, 4 teams. And then when it is super good and these 3 teams actually say, hey, boss, you must really roll out to the whole company. Only then they'll actually roll it out. So this is so-called the land and expand kind of strategy that most software companies use. And for Palantirs, this is a very good news because 100 of them are just paying 1 million. And for this kind of deals, I suspect is usually for smaller teams, which is the landing part. And having secured that $1 million is a justification for investors like us, right? That, hey, if they're going to spend 1 million for these small little teams, sooner or later they will be spending more on $5 million worth or $10 million worth. One of the hurdles that actually Palantir was bringing up last time, that as a company that's dealing with so many government and private companies, their biggest hurdle is not other competitors. That's what they say. Their actually biggest competitors are the people who are trying to build their own products, their own softwares, their own version of Palantirs. Is this the best use of the company's resources or the organization resources to build? Maybe not, but if the companies have that kind of mindset, then of course they cannot potentially get some earnings or revenue from there. Yeah. So this is part one where I think the potential is going to be very big for Palantir as they can expand more of these 104 deals to more high ticket items. Another thing is that I would like to focus your attention on is this short term and your long term RPO. Right. So what does RPO stands for? Right. It stands for remaining performance obligations. So what it means is that we still need to service you for the remaining of, let's say, 1 year, 2 years, or 5 years, for example, right? And what this means is that they have secured the deal, they have that contract. It's just that because they haven't serviced the customers yet, they cannot recognize this as a revenue. These numbers that you see here are numbers that will eventually be reflected on their revenue, on their P&L. It's just not yet. Future revenue, yes. Or some of the other people will say like deferred revenue. If the numbers keep increasing, which also tells you that in the next 1 year, 2 year, or I don't know how many years, depending on how they state the long-term RPO, this money will be eventually goes into their pocket, right? And inside the Form 10Q, right, actually stated clearly that these numbers inside this RPO, right, are non-refundable. So it's confirm will get, it's just when, right? And that's why they actually separated out into short-term and long-term RPOs, right? And the short-term ones is actually less than 1 year. So if I were to track it, it's actually the next 1 year. So can you imagine for the next 1 year's revenue, which is 2025, right? They're looking at an additional $730 million. And right now their revenue is only 700. So it's like almost 1 times of their revenue, current revenue for this quarter is just waiting for them. Okay, so I think, so I actually extracted some of the quotes from the earnings report. Right? So I'll just roughly go through it. So they've talked about the value of AIs in terms of the whole landscape. It's really not in terms of the LLMs, which is what Google, Meta, or like ChatGPT is doing. It's really about how to utilize this kind of LLMs to help the organizations data, right? So this is where the AIP really comes in. And with the boot camps that they have been running, it's really to deliver proof that this product works. It's not, I'm just telling you a fantasy or something like that. Okay, so another thing is that Alex Karp actually mentioned, which is a CEO, he actually said this like upfront that, hey, we really want to work with the best companies, right? He brought up a point that instead of having 10,000 clients that some of them hates you, but they're still using your product, but most importantly, they hate you, right? Would you rather have that, or would you rather have less than 10K of clients, but they are the world's best companies? I will rather focus on the second one. So what he's trying to say, they only want to work with the best because only the best will recognize the usefulness and the effectiveness of Palantir's products. Okay, yeah. So let's quickly go into whether this is a good time to buy or sell. So this is of course not a recommendation, but if I were to base off the company's valuations, right, I would take from this point of time, which is around the time when they start turning profitable, right? And then my justification is that the share price actually starts shooting up because people know that it's turning profitable. It's good because it's turning profitable. The chances of them getting included into S&P 500 is much higher, and the bullishness actually starts coming in. If you were to ask me, how can I value this company? Right now, the method I'm doing is taking an average of the past time frame of the overall share price and price to sales. Then I got FinChat.io, which is you can find how to use it on our YouTube that Eric actually did on it. Currently, it's around 37.41. I believe after the market opens, it's going to be like another 39, 40 kind of numbers because this is before the spike to $47. Okay, so with that in mind, the average or so-called the fair multiple to me at this point of time is around like 20, 30-ish lah. Currently, I think it's still very overvalued because of the whole hyped up of the share price, right? My personal take is that I will not enter, right? Of course, I just sold lah. So with that cash on hand, if I were to buy in, that would be like selling low and buying high. So it doesn't make sense to me. In terms of the outlook, I think Palantir is still something that I would love to continue holding based on what that I'm seeing right now. And I don't foresee them having big problems based on how they have been acting, and also by working with like military and government bodies, right? The chances of them failing is less likely because of years of experience from 2013 all the way until 10 plus years, right? Their expertise actually means that they have done the ground up work all the way until now to see these kind of results and also to reap the rewards lah. Thank you so much for watching to this video, and I hope that you have enjoyed and learned something from this segment of our weekly WealthPulse sharing. We conduct our WealthPulse every Tuesdays 8 to 9 p.m. as we deep dive into the latest and biggest market news and what this means to investors. Do remember to like, subscribe, and also share with more of your friends to support us in making investing easy for everyone to follow. Join us in our community through WealthPulse, and I have placed the link in the description box below. I will see you online then. Bye bye.